Hey guys, Tony here. So I wanted to explain how I forecasted or why I sold those express calls before that $9 run up. Essentially, what I do when I see plays like this, where they start to run really fast, all I do really is just add some Fibonacci extensions to kind of let me gauge at how. Sorry, I just ate right now, but kind of let me gauge at how far something can actually run, right? So we're looking at a relatively high point right here and the relative low point right here, right? So all we're gonna do is use the forecast backwards. All we're doing with the fibs, you're supposed to use it like this, right? Go from low to high, and this gives you an indication of where certain tiers are on the fib levels, right? Exactly where something's going to retrace to, jump up, etc. What we're doing is the complete opposite. We don't want to look for retracement. We want to look for essentially a forecast, right? So what we're doing is actually we're actually first doing the high point, relative high. Whoa, that is not the fib. There we go. So we're doing the relative high point, which is up here. And we're doing all the way down to the low point, which is down here. This is the low point down here. This candle right here, when that wick, that 283 level is a low point. So we're just spacing it out to the right because I want to be visual with it. I want to be able to actually see where price can potentially go, right? So we're gonna go down. We're gonna place it down at like what, 283, right? We'll place it right there. Now what we need to do is, because we know it broke that all-time high, the next level that this stock can go to, it can be any stock really, is going to be that $9.07 level. We'll just go ahead and do $9 just to kind of keep it even, right? Essentially, what I like to do in runs like this and just kind of forecast, we can kind of assume that the next push up is going to be towards the $9 area, right? This next 1.618 fib level right here. Again, it won't necessarily hit it that same day, maybe a day later, whatever. But as far as peaks, if it actually breaks previous highs, you can expect to get a relatively close price of this $9 peak right here, right? So I want to be a little bit more conservative, so I'm not going to actually sell or wait till it hits $9.07. I would actually go lower than that. So I would actually do a 5% drop from there. So 5% would be right, like 5%, like there we go. So that would be a 5% drop from where the fib level is, right? For where that forecast is giving me. If I would have, which is basically what I did, right? If I would have done this precisely, I would have started selling my position off at, as soon as it hit $8.61, or I would have started selling this position at like $8.50 or whatever, right? I would not sell when it hits, $9.07. That's not what I would do. I would actually have that retrace of 5%. I would look at where that is, which is, again, it's that 8.61 level, which is the $8.61. Highs of Express today were $8.67, which is basically right on the top right there. So I would have started selling more than likely around, as soon as it hit $8.60 or I saw it touch $8.60, I would have immediately began to sell, if not a little bit sooner, which is the $8.50 mark. That way, if I can start selling at $8.50, there's a likelihood that it's going to keep running towards $8.60, making my options basically, I would be able to sell them easier, because technically now, because it rose those 10 cents, I'm now selling them for under market value, right? But I'm basically selling everything like a lot more quickly. But yeah, this is basically what I did today for the Express play. Why I expected a run close to like that $9 mark, but why I actually took all my calls out and my profit before that, because there's a chance that it's going to hit $9.07, but I like to be a little bit more conservative, which is why I actually took price out 5% lower than that next fib level. So I hope that's relatively easy to understand from everybody. This is only something that I do on stocks that break out. For example, you can see like I'll give you guys another example of like real quick of like CLOV, right? CLOV, oh whoops. So CLOV broke out like a little bit ago, right? So CLOV broke out here somewhere. So I would have had to use low to highs, right? So it broke out, let's say around here, this mark right here, or it actually really broke out here, right? So if I actually had to do something, I would probably have used the retracement from these highs of 11 something. Did I not click it? All the way down to previous lows of like here, which is there, right? So as soon as it broke previous highs, which is that $11.87, I would have probably taken profit at, you know, a little bit under $14.82. I would have probably taken profit somewhere around, let me see, 5 cents, 5% under. We'll do 490, whatever, 490. So I would have actually started taking profit at 14.10 if I had calls here. And if this was more like during the week as opposed to like a Friday like today, I would have actually like taken what is it called, like half the position out and maybe let the rest of it run for like one more day. And if I would have done that, it would have, the next day it would have rallied all the way up to, what is the high of here? It would have rallied towards like 24 bucks, which is absolutely insane. But again, I would have taken profit down here at these levels of $14.10, which would be that next fib level up to the high side. But again, to be conservative, we're playing down like another 5% just to make sure that we're actually in profit. And for example, here in CLOV, it doesn't just drop from this fib level all the way down instead of shooting up like this again another second day and another third day like it did, right? So I hope this video explains it a little bit easier to you guys, how I actually use the fibs to forecast, and why I use the next fib level up. I actually retrace about 5% just so I can be a little bit more conservative and take my profit earlier than later, and kind of reassure myself that, you know what, like this, the way to take profit here is actually a solid strategy. So I hope this explains it. I know a couple people on my TikTok were asking me how I came to the conclusion that $9 would be that express top, and why I actually started taking profits before that instead of on that fib level. So I hope this kind of explains to you guys what I do with these general like pops and prices like this, and how I tend to what strategy do I use to play these pops and price like that, these like spikes up in random tickers. So I'll see you guys later.